All right, let's dive right into this explainer. Today, we're taking a seriously fascinating journey through time to see exactly how money evolved. If you're a social studies buff or maybe just someone looking to boost your general knowledge, you are absolutely in the right place. We're breaking down some of the most essential concepts straight out of Class 9 in CAYT to really understand a tool we all use, literally every single day, yet rarely stop to think about. I'm talking about money. Now, to really wrap our heads around why money is so crucial, we kind of have to imagine a world entirely without it. So picture this. You step into a bustling market because you really need to buy a new pair of shoes. But your pockets? Completely empty. No cash, no cards. The absolutely only thing you have to trade is a giant, heavy sack of wheat from your farm. How on earth do you make that trade actually happen?
Well, this little scenario brilliantly illustrates the single biggest problem of early human history. You, the wheat farmer, track down the shoemaker. You offer him your wheat for his shoes. But there's a massive catch. The shoemaker just looks at you and says, "Hey, I don't need wheat. I need clothes," right? He desperately wants to sell his shoes, but he has absolutely zero interest in buying your wheat. So you're stuck.
This exact frustrating moment is what economists call the double coincidence of wants. It basically means that in a barter system, what a person desires to sell has to be exactly, and I mean exactly, what the other person wishes to buy. Both parties have to perfectly agree on the trade. Finding someone who wants exactly what you have and magically has exactly what you want, yeah, that was the biggest headache of the ancient world. It made trade unbelievably slow and just ridiculously difficult. So, moving on to part one, the age of coins and how we solve those barter issues. To finally solve all those frustrations of the barter system, societies desperately needed a common middleman, something everyone would just agree to accept. Enter the very first coins. Think back about 2,500 years to early Indian punch-marked silver coins, known as karshapanas. These were some of the absolute earliest known coins in India. They were made out of silver and actually had these little images of nature, like the sun, animals, and trees, punched right into them. With a common currency like this, our shoemaker didn't have to wander around looking for a clothes merchant who happened to want shoes. He could just sell his shoes for coins and then use those exact same coins to buy his clothes. Problem solved. And over the centuries, as empires grew larger and wealthier, their money naturally evolved too. We started seeing beautifully detailed coins from the Gupta Empire, actually depicting the king himself. Later on, we got striking gold mahars from the reign of the Mughal Emperor Akbar. These powerful dynasties were minting coins in precious metals, like gold and silver, but crucially, with highly standardized weights. This standardization built immense trust. Suddenly, everyone knew exactly what a coin was worth, which actually helped Indian coins become a trusted medium of exchange, even in foreign countries. Which brings us to part two, the shift to paper, a much lighter alternative. Now, as you can probably guess, carrying around huge sacks of metal coins eventually became a massive physical burden for global trade. Just imagine trying to buy a huge plot of land and having to lug around literally thousands of heavy metal coins. It's a nightmare. So in the 13th century, the Mongolian ruler of China, Kublai Khan, completely revolutionized how we exchange things. He ordered the value that was previously in coins to be shifted onto paper. This brand new paper money was called chow. Since the Chinese had already pioneered the printing press, they could easily create and print this lightweight, super transportable currency. It was honestly a total game changer for merchants and the whole economy. Okay, let's jump to part three, modern money's value. Why do we actually accept it? Seriously, think about the paper cash in your wallet today. Why does a flimsy little piece of printed paper have any actual value? I mean, you can't eat it, you definitely can't build a house out of it, and it's certainly not made of solid gold. To really get this, we have to contrast the past with the present. Ancient money, things like cattle, grains, or even those gold and silver coins, had intrinsic use, right? A cow gives you milk. Gold can be melted down into jewelry. But modern money? It is completely useless on its own. It is literally just paper, or just a digital number sitting on a screen. So why in the world do we accept it? Well, we only accept these paper notes because they are legally authorized by the government. Period. In India, for example, the Reserve Bank of India, the RBI, issues currency notes strictly on behalf of the central government. As per Indian law, absolutely no other individual or organization is allowed to issue currency. Because the government guarantees it, and because we all collectively trust that guarantee, that little piece of paper suddenly holds immense, real-world power. And that leads us into part four, the digital revolution, and money in the modern era. Eventually, even keeping large amounts of paper cash at home became a total hassle, not to mention a pretty major security risk. So people started storing their wealth in banks as demand deposits. This meant your money was locked up completely safe, but you could still use it whenever you needed to. Instead of handing over huge wads of cash, you could just write a check, simply instructing the bank to pay a specific amount right from your account to someone else's. And today, wow, we don't even need paper checks anymore. We can transfer money instantly using debit cards, credit cards, or honestly just by scanning a quick QR code with our phones. When you look back at it, our methods of exchange have just radically accelerated throughout history. I mean, we went from a clunky barter system around 6000 BC to those early metal coins around 600 BC. Then official paper money was introduced in India way back in 1861. Fast forward to the 1980s, and we see digital bank cards emerging. And then, boom, in 2016, India completely revolutionized digital payments with the UPI system. We have quite literally gone from trading actual cattle thousands of years ago to sending wealth through invisible airwaves in a fraction of a second today. It's wild. And as we become an increasingly cashless society, our whole concept of money is clearly still shifting. It's no longer really a physical object, it's mostly just data. So I'm going to leave you with this final thought to ponder. Considering we went from dragging around heavy cowrie shells to zipping around invisible digital codes, what do you think the future of money is going to look like?